Bitcoin has managed to get back to the $66,000 mark. There are objective reasons for that, and perhaps the market can take a course for continued growth. But other events are much more important. We've been given great hope for a real to the moon, where the price of Bitcoin will be equal to $100,000 or even more. What are the key factors that could completely change the situation, and what does it mean for us? Subscribe to the channel. Let's get started. Bitcoin price is moving according to the forecast of trader Peter Brandt. He predicted a passage of the 75,000 level after the completion of the correction, if the rate does not fall below $60,000. On May 15th, we got a confirmation of this scenario after it returned to the $66,000 level. This happened against the backdrop of two key events. The first is the release of the U.S. inflation data for April. This data also showed a slight decline to 3.4%. Importantly, the producer price index data came out the day before, and despite the growth, they exactly hit the forecast. That is, they did not become a shock for investors. And on the same evening, the head of the Federal Reserve, Jerome Powell, made a speech where he said that the U.S. economy remains strong. He gave a forecast for the GDP growth of 2% and shared his concerns about the lack of significant progress in the fight against inflation. The latter is a bearish factor, and now Fed officials are increasingly talking about the possibility of keeping rates high longer than markets expect. But all these fears were dispelled after actual inflation went down again, and the market switched to event number 2. We're talking about spot Bitcoin ETF, which traded in the green zone for the last 3 days. But what's more important here is not how much money the crypto funds got, but who it came from. Wisconsin Investment Board bought $99 million worth of ETF. But the interesting thing is that it's a U.S. pension fund. And according to a Bloomberg analyst, institutions like this have a history of moving in herds, which means we'll be hearing about more purchases soon. And this is part of BlackRock's plan. In early May, it was reported that they plan to attract U.S. pension holders to buy Bitcoin. We also see demand for ETF from investment companies and hedge funds. So Millennium Management invested 3% of their funds, or $1.9 billion, on the spot Bitcoin ETF. And Pine Ridge Advisors bought Bitcoin ETF for $205 million, or 23% of their capital. For the Wall Street world, this is tantamount to crypto traders doing all in. Looks like we're on the cusp of something really big. Among the ETF buyers were banks, which is also worth parsing. While JP Morgan CEO Jamie Dimon tells us that Bitcoin is only needed for drug purchases, money laundering, and tax evasion, his bank is investing $652,000 in the first cryptocurrency. The amount is actually very small for such a financial giant, and it's more like a test transaction. But still, they are exploring the market. And Wells Fargo and BNP Paribas are behaving similarly. But the smaller fish, PNC Financial Services and Bank of Montreal, bought ETF for $10 and $6.7 million respectively, and it can already be called an investment. There's also information that the giant Morgan Stanley invested $270 million in crypto ETF at once. However, it's still necessary to check everything, as I have not seen 100% confirmation of these data, although they are reported by authoritative sources. And now the most interesting thing is what I call the big hope at the beginning of the video. Let's look at the history of Bitcoin. In the 17th year, the cycle peaks at 20,000 after the start of futures trading for the first cryptocurrency on the Chicago Mercantile Exchange. In the 21st year, the cycle peaks at $68,000 after the U.S. approved a Bitcoin futures ETF. And in January of the 24th year, we got approval for spot Bitcoin ETFs. And I was skeptical about this decision until the last, because it was a reason that was logically left for later to make a new cycle peak. Now that the ETF is fully traded in the US, the question is, at the expense of which instrument to set a new high? And the answer came again from CME. According to media reports, the exchange is working on launching spot Bitcoin trading. In fact, Bitcoin will be recognized as a commodity. The realization of these plans will put the cryptocurrency on the same level as gold. Although it has no physical form, the world is moving more and more towards digitalization, when the ability to feel with your hands and put it in your pocket is no longer an advantage before making a purchase decision. In addition, there is information that the crypto exchange Coinbase is preparing an investment product for the market of pension funds in Australia, which are estimated at $600 billion. And behind the launch of cryptocurrency ETF trading in Hong Kong are investment firms from mainland China. That is, despite the not-so-impressive trading results, China may still officially reopen access to the crypto market via ETF in the future. Also in line for the flip of the mortal is the world's top 2 investment company, Vanguard. They've had a head change, and the new big boss is a BlackRock exit named Salim Ramji. Interestingly, Vanguard has previously flatly refused to launch their Bitcoin ETF, and Salim Ramji was in charge of cryptocurrency funds specifically at BlackRock. There's an official statement to the press that the new head will not change the financial views of Vanguard. That is, no cryptocurrencies. But you and I know the difference between what they say and what they do. Jamie Dimon of JP Morgan is a good example of this. Literally, as we were working on the video, news came in that a Fed official is urging the U.S. government to adopt regulation on stable coins. We previously discussed a bill that has already been introduced in Congress, and that it could cause a lot of problems for the leading stable coin called USDT. However, the market is hardly reacting to this rather strong FUD and is trying to move further. Buyers are gaining strength not only due to the news. There is data about the growth of stablecoins inflows on the exchange, which is a sign of the whale's readiness to buy the cryptocurrency. Also, analysts note the end of the sell-off on the part of whales and long-term investors. They've recorded enough profit on the growth at 70,000 and are now going back to buying to make more money during the to the moon. If we talk about the technical picture, in a recent video I talked about the fact that Bitcoin sideways could be extended to a range of 58 to 65,000. In fact, this is exactly what happened, and the price hit resistance at $66,000. Taking into account all the factors, a break above and a second assault on 70,000 looks like a priority scenario, but we should not write off the plans of big capital to make money on Bitcoin speculation. Therefore, I would not be surprised to see bearish factors emerge to hold the price at the current level, and the sideways movement will continue for the next 2 weeks or more. That said, the long-term trend remains bullish, and as the events in this video begin to move from rumor to fait accompli, we'll see a resumption of the parabola rise. You will help Bitcoin and me personally if you subscribe to the channel and support the video by liking it. Thanks for watching.